Hello, this is Brian Resney, president of Resney Wealth Management, bringing you an important update about the economy and the investment markets. Well, we're off obviously in 2019. The overall economy situation actually is quite good. We had job numbers that came out a little over a week ago that were about 312,000 new jobs versus estimates of 175. So clearly the economy is expanding, not contracting. One of the things that I've repeatedly warned investors about, not only our clients, but a lot of my radio show and TV listeners, there is too much media today. It's all hyped up and it gets people worried, I guess is a good way to put it, about their investments. Too much media. And remember, media sells on hype. So what I'm going to explain to every investor, or my recommendation would be, is turn that junk off. Media and hyped up media is worthless. Go play a game, take a walk, go exercise, but don't watch the majority of media. If you want to learn about the financial markets and you want to listen to really boring news, listen to Bloomberg. That's probably the only really factually good show that we find on the financial markets. Anything else is hype and tends to be political and is really worthless. Making emotional decisions around your investing or investments is obviously very bad for your wealth. We feel strongly that 2019 is going to be a good year. From what we're seeing right now in our research, we're looking at GDP growth between 2 and 2.5%. That's not a recession. Valuations of the equity market are very reasonable, and some areas are actually quite cheap. We like that. Interest rates, again, are still cheap historically. The 10-year is about 6 to 6.5%. Right now, the 10-year is under 3%, less than half of the average. Remember, we've had the economy expand substantially with GDP growth over 3% when interest rates were over 6% on the 10-year, and right now we're under 3%. So again, we're not seeing signs of recession. There's always little things that maybe bother us in our research, but I would say 95% of what we're seeing is positive on the uptrend. We're going to continue to do the right job, and we're going to continue to run a strategy which always includes major risk management for the next recession, which we're not seeing. But if you listen to these Wall Street firms and brokers, they've called recession the last 5 or 6 years, and if you would have listened to that, you would have done the wrong things with your money and you wouldn't have made money the last 5 or 6 years. Again, this is a problem for investors. My recommendation to every investor, of course, including our clients, if you're looking at your account more than quarterly, you're looking at it too much. I will tell you the vast majority of clients, when I do a kind of off-the-cuff survey, the majority of our clients, I'd say better than 90 to 95%, only look at their account once a quarter. That's excellent because you miss all this in the middle, and that's the emotional part. The client who looks at their account daily, weekly, or even monthly, in our opinion, is too much. You're paying us to worry and manage the money properly. Let us do the worrying. Go for a walk, exercise, have some fun with your loved ones. But remember, emotions get stirred up by hyped up media, and media is sold on hype. So again, detrimental to your wealth and your decision making. We like what we see. We feel we are properly invested. We're going to do a few fine-tuning adjustments probably in the next week or two in some of our portfolios in order to capture what we feel is going to be a much better year in 2019 for the growth side of it. And again, if you have questions about your portfolio and your client, please give the office a call or schedule a review type appointment. And as always, we appreciate your business and we appreciate your referrals. Keep us in mind if you have any friends or family members who need a financial money manager. And again, make sure you have yourself a safe and prosperous week.